Hey, let's dive right into the exciting world of stocks and the latest updates that are shaking up the market. So brace yourselves for some major news. Also, if you want more stock market news updates, go and like this video and subscribe. Right now, stocks are experiencing some minor losses for the third consecutive day in a row, and let me tell you, it was quite a roller coaster ride. The reason behind this downward trend was due to the fall of big tech shares, which had been the driving force behind recent gains. However, the main driver for why stocks went lower is because of Federal Reserve Chairman Jerome Powell, who testified before Congress and dropped a bombshell. He revealed that the Fed is gearing up to raise interest rates again before the year wraps up, all in an effort to combat inflation. This means that growth stocks will pull back in the coming weeks, especially after more interest rate hikes. The reason why interest rate hikes cause growth stocks to fall is because most growth companies carry large amounts of debt on their balance sheet. And higher interest rates make it more difficult for growth companies to pay back and justify their debt load. In other news, India's Prime Minister, the incredible Narendra Modi, touched down in the US earlier this week, and tonight he'll be the star of a lavish state dinner. This is a big deal, as Modi will only be the third world leader to receive such an honor during Joe Biden's presidency. Modi will be engaging in discussions about deepening economic ties. And guess who won't be on the guest list? That's right, it's China. With US-China relations at a tipping point, American companies are actively seeking to diversify their manufacturing base. And guess who's ready to step up to the plate? That's right, it's India that essentially wants to replace China in regards to manufacturing products for America. They are seizing the opportunity and positioning themselves as an attractive alternative for US businesses. The economic dance between India and the US is already a sight to behold, particularly in the tech sector. Just take a look at these mind-blowing facts. Apple has shifted some iPhone production from China to India, and Tim Cook, the legendary CEO himself, attended the opening of India's first Apple store. IBM has about half of its workforce located in India. And get this, around 60 Fortune 500 companies are led by CEOs of Indian origin, including big names like Google and Adobe. Impressive, isn't it? CEOs from Apple, Microsoft, FedEx, and Marriott are expected to attend the event, and you can bet that the relationship between India and the US will reach new heights. Get ready for new deals because they're coming. On top of that, Elon Musk himself already met with Modi earlier this week, and Modi convinced Musk to make significant investments in India. Musk, being the maverick that he is, pledged that Tesla will be in India as soon as humanly possible. Buckle up, India, because the electric revolution is on its way. Both the US and India share a common goal: countering China's economic might. However, concerns have been raised about Modi's track record on human rights. He has faced criticism for cracking down on dissent, restricting free speech, and sowing religious discord. These are serious issues that need to be addressed as this exciting economic dance unfolds. In the end, this should reflect favorably on tech stocks. Now let's shift gears and talk about a legal showdown in the tech world. Brace yourselves for the latest drama involving none other than Amazon. The Federal Trade Commission, FTC, has filed a lawsuit against the e-commerce giant, alleging that they violated consumer protection laws by manipulating millions of customers into signing up and staying signed up for their $139 a year Prime service. But how did Amazon do it, you ask? Amazon did this by making it harder for customers to buy products without a Prime membership, and by employing dark patterns, which are sneaky design tactics that subtly convince users to enroll in Prime without their consent. The lawsuit claims that Amazon's leadership knew about these tactics and deliberately slowed down changes that would have made it easier for users to cancel Prime. That's quite the allegation. But don't worry, the cavalry is here. The FTC proposed rule changes that would require companies to make canceling a subscription as easy as signing up for one. Say goodbye to spending hours on the phone trying to cancel that impulsive subscription because relief is on the way. In other news, hold on to your hats because Microsoft has unveiled its roadmap for building a quantum supercomputer. Can you believe it? They believe that within less than 10 years, they will have a quantum supercomputer capable of performing a whopping 1 million quantum operations per second. This would literally change the world as we know it. Ford is also in the news today because the automotive giant has just been awarded a staggering $9.2 billion loan from the U.S. Energy Department for its EV battery venture. Talk about an electrifying boost. And speaking of automotive companies, Morgan Stanley, a key player in the financial world, has downgraded Tesla to equal weight from overweight, while raising its price target to $250 from $200. So this is mixed news, but overall a higher price target is good to hear. On a separate note, Robinhood, the popular stock trading platform, has announced its acquisition of X1, a startup that offers a no-fee credit card. The deal amounts to a jaw-dropping $95 million in cash. This shows that Robinhood is making big moves which will hopefully lift their stock price. There is also an exciting development in the world of augmented reality. Facebook, now known as Meta Platforms, has joined forces with Qualcomm to supply chips for future AR projects. This just gets us one step closer to the metaverse, which is Meta's ultimate plan. Last but not least, Micron, the renowned chip manufacturer, has revealed plans for a new chip testing and assembly plant in India. This venture could result in an investment of a staggering $2.75 billion. The future of technology is looking brighter than ever. That's a whole lot of exhilarating news for today. Stay tuned for more updates, exciting market movements, and jaw-dropping announcements. Remember to keep your portfolios strong and your enthusiasm high. Until next time, happy investing.